All right, welcome into Market Day Report. I am Scott Shellady, still the cow guy. Thanks for waiting for me all day yesterday. Back in the saddle and raring to go. Let's see about these markets. So they haven't been doing too well. Let's take a look and see what's going on in that corn market as we pan over to a different camera, and you can see what that big board behind me looks like, right behind that big fat head of mine. All right, there you go. That's corn. The front month is up a penny, 6.30 and a quarter's last there, which really, funny enough, is about 3 cents, 2 3/4 cents off the highs. But as you go out the deferreds, let's go out to new crop. Geez, down 5.5 cents. 5.50 was breached earlier today. Look at that. 5.47.5 was a low. We were just talking about 5.60 about a day and a half ago, right? So this is trading heavy. 5.51 and a quarter's last in that new crop. That's down 5.5 cents. So corn kind of having a rough go as you go out those deferreds. Let's see about soybeans. What do we have happening over there? Well, kind of the same-ish kabibble, all right? May down 16.5 cents to 14.50.5. Towards the lower end of the day's range there. July's off 21.25 cents to 14.27.25, 5 cents off of those lows. And then as you go out the deferreds, look at that. No, folks, we were talking $14 not too long ago. 12.75 is last out there. We're down another 21 cents as those deferreds kind of take it on the chin. So we're 0 for 2. I don't like those two boards. Let's take a look at wheat. And I don't think I'm going to like this one either. This is Chicago wheat. May's down 17.25 cents. Ugh, and I don't like that number. 666 even, right? 666 even is one of those bad ones, isn't it? Well, there we go. 666.5. I don't feel bad now. But that's 16.75 cents lower there. Too many sixes in that one. But as you go out the deferreds, we still lose double digits out there. 14.5 cents lower in that D's contract to 701.75. How about the hard red wheat in Kansas City? Lower, but not as bad. I guess this is going to be a good board, right? We're only down 6 3/4 cents in the May. 8.13.5 is last there in the middle of the day's range. Actually, probably closer to the highs than the lows. But as you go out the deferred, say D's is down 5 1/4 cents to 8.04 6 cents from the highs there. So that brings us on to spring wheat in Minneapolis. That's down 8 cents up front. That's May. 8.37 3/4 is last there. July's down 7.5 cents to 8.36.5. So again, between 6 and 8.5 cents lower across the board when we talk about spring wheat in Minneapolis. Let's go to the cotton. See what's going on out there. Here we go. A standing round of applause for the cotton market as it's the only one higher across the board here today. May's up 77 points to 78.63, making its way back to that 80-cent level. And we're up 42 cents in the D's to 79.96. All right, let's bring in our next guest analyst. He hails from CHS. It's Riley Schwieger, all the way up there. Where are you, Riley? Are you coming to us from what? Inver Grove Heights, where the rest of the crew is, right? You have a big complex up there, probably like 700 or 800 employees that work there, right?
Yes, we do. And well, I mean, we're a little bit more positive on the energy side here than what you just showed us.
Good.
Markets are looking to have a little bit more of a rebound this week after being pressured by what we saw in the banking sector throughout last week. Crude is pushing back above $70 a barrel, and that's partly due to a positive EIA report today. We did see crude stocks for the headline figures here rise by 1.1 million barrels. That is a 22-month high in crude, so we are looking at a pretty significant surplus there. And we did see crude production increase by 100,000 barrels per day. Products, we saw gasoline fall larger than expected. We saw a 6.3 million barrel draw. We're 12.2 million barrels below the 5-year average for inventories there. So a little bit different story as we transition to products. Diesel is kind of looking very similar, fell 3.3 million barrels, 20.7 million barrels below the 5-year average. We did see a demand increase for both gas and diesel, but overall product demand is 6.2% below year-ago levels. So positive for now. Obviously, a big Fed decision that we'll be watching here midday, and we'll kind of see if that determines the trend for the rest of the week.
I have one big question before we go. No one else is talking about it, but I'm that guy, so I'm going to bring it up real quick. We talked about the administration refilling the Strategic Petroleum Reserve below $70 a barrel. We had a 65 print not too long ago. Have you heard about them filling up anything at all whatsoever? Because I have not heard about them buying a barrel.
We have not heard of any announcement there yet. One of the key terms they used was stability, and I would say we have not seen stability in this range. So they're going to look for that to develop.
Okay, thanks for that. Great stuff, Riley Schwieger. We're going to go away. We're going to pay some bills. We're going to come back and talk more livestock with me after these messages.